in terms of export data. Now, 9 months FY26, Laurus Labs looked good again. So it was up 71%. Divi's Labs and Blue Jet, their export data was strong at around 15% odd. Concord Biotech was flattish. So December 2025 overall, however, witnessed a mixed performance. Divi's saw a good rebound. It was up 55%. The likes of Gland was higher. Newland Labs also gained, and Piramal Pharma was also higher. So overall, I think the street was a little worried about the Q-on-Q export data, which looked maybe a little sluggish for the likes of a couple of these companies, whereas it looked good for the likes of Concord Biotech, Piramal Pharma, and Blue Jet Healthcare. But nonetheless, wanted your thoughts, Ambrish, on a couple of these CDMO companies, because, Q3 is expected to be a little challenging for them in terms of earnings, simply because of the lack of innovation spend in the US. What's your sense?
No, I don't think there should be an issue longer term. I think just 1 or 2 quarters, there could be a bit of an issue. And in case we see correction, then should be a buying opportunity. But something like a Laurus Lab, which, where we have seen a very good move in the last 6 months to a year, I think it's a good time to at least book some profits and possibly buy into stocks like Divi's or Gland, where Gland Pharma I still see at least at the 400, 500 rupee further move from here.
Well, Nagraj, any view on these IT companies? We're going to see them report numbers soon. TCS is one, HCL Tech later, and then later in the week, Infosys.
Yeah, I think chartically, all the three stocks are placed very well at the lower levels. We have seen some moderate downward correction in the TCS from near the hurdle of 200-day EMA, somewhere around 3,300. I think nothing has changed significantly over the last couple of weeks, placed at the consolidation mode. And I'm expecting further upside from here on. Chartically, the overall trend of these stocks are looking positive, and I'm expecting more upside in the near term.
All right, that's a sector we'll keep an eye out on. But stocks such as Manappuram Finance and Shakti Pumps were also buzzing in trade today on the back of some stock-specific news flow that came in. Vivek Iyer is joining us now to break down what's driving the action in these counters. Vivek?
Well, that's right. We've taken 3 stocks on the radar today, stocks that are buzzing on the back of news flow. Some relief coming in. First on the list is BSE, quite a sharp up move. Important comments coming in from SEBI chairman, where they said that no action or no change in derivatives market, at least for the time being. And along with that, some positive commentary coming in terms of the NSE IPO, giving a sentiment positive as well. The other stock on the radar is Manappuram. The company has gone ahead and denied the report of another agency that said that RBI has raised concerns with respect to the Bain Capital deal. They say the report has been denied, factually incorrect, as well as speculative in nature. And the last stock on the radar is Shakti Pumps. The company went ahead and told the exchanges that they've received orders worth over 650 crore from the Karnataka Renewable Energy Development Authority. Remember, the order book at the end of Q2 was 1,300 crores, and the company has announced orders worth almost 1,900 crore just in the last month. So positive news flow coming in for these names.
Okay, all right, Vivek. Thanks very much for that. So lots of stocks buzzing around in what was a good session for us by the close of trade. Ambrish as well as Nagraj, thank you very much for joining in and taking us through all of your opinion for today's trading session. We're going to take a short break, but up next we'll get you all of the top corporate voices along with key market events to watch out for. Stay tuned.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी। अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस by Century ProWood.
The best investment one can make in life is finding the right life partner. That's why we created VIPshadi.com. Register now.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Welcome back. TCS Q3 numbers breaking for you on the screen. On the bottom line, the company has delivered 10,657 crore. That is a decline of 11.5%, almost 12% on a quarter-on-quarter basis, coming in lower than street expectations. But here, the miss appears to be on the back of an exceptional one-time loss. There are three key, just prima facie, it looks like an exceptional loss of nearly 3,400 crore rupees, which is courtesy one, restructuring expenses of 253 crore. I can see a statutory impact of the new labor codes of about 2,100 crore. And finally, there was a provision towards a legal claim. Perhaps this is to do with an IP infringement case, and that has impacted the bottom line by nearly 1,000 crore rupees. So there is an exceptional item which appears to have dented the company's bottom line. On the revenue, revenues of the company have gone up by 2% on a sequential basis. That seems to be slightly ahead of street expectations. Bottom line, lower, declining 12% on a sequential basis, but there is an exceptional impact. The company has said there are three key reasons. A small one is a restructuring expense of about 253 crore. Statutory impact of the new labor codes is a big one, 2,100 crore, and a provision towards a legal claim. Even in the last quarter, there was an exceptional loss of 1,135 crore, and that was on account of restructuring of the employees. Remember, TCS about 6 months back had announced that they're letting go of a few employees, and that had resulted in the restructuring loss in the previous quarter, and this time it's the new labor code. We have with us Sandeep now joining in. Sandeep, you want to quickly comment on this exceptional? Will it take the street by surprise?
No, I think, this was known that, because of this new labor code, many of the companies in IT and bank will have some kind of provision, which will have an impact of one time and also a recurring piece. So I don't think this is a negative surprise. I think at the EBIT level, the company has delivered broadly in line with estimate, and even on the revenue terms, as far as we can see the rupee revenue, it is broadly in line. So we need to see the dollar and constant currency numbers, number one, and number two, the deal wins. So these two numbers probably will be very important. And also if they can, they are going to declare anything on the AI revenues. I think that is going to be critical.
Okay, on expected lines, the legal claim is on account of the IP infringement case, which is related to Computer Sciences Corporation, CSC. This was also a known that the street, that the company is likely to take an exceptional one-time hit at the bottom line. That the company has accounted for about 1,000 crore. The EBIT margins have come bang in line with street expectations at 25.2%, unchanged on a sequential basis. We still don't have the constant currency revenue growth, but it's likely to be a fairly muted quarter. In the prior quarter, the company's top line had gone up by 0.8%, and currently consensus expectations are for a growth of about 0.3, 0.5%. So it's going to be a slow quarter on the back of seasonality. But as we begin, Sandeep, 2026, the geopolitical noise has gone up so much, whether it's to do with Venezuela, whether it's to do with Greenland. So the question is that with this kind of geopolitical headlines that we're dealing with every single day, January, February is the time when clients typically set their budgets for the full year. Now, with so much uncertainty looming, do you think discretionary spending further takes a hit?
No, so I think, it is the beginning of the year and generally, it is just a few days of the month and many of the clients would not have finalized their budgets, or even if finalized, they would not have communicated to the companies. So I don't think any company will be able to give a clear guidance on how much client is going to spend. But broadly, because of AI and reduction in efforts, I don't see a big jump in budgets will be there for any of the software service providers this year. That broadly is, I think a known fact. So I would not be expecting a big positive commentary on that side. This year, CY26 will be broadly, flattish kind of year, maybe 2-3% growth here and there. That's it.
Okay. The company's total contract value stands at $9.3 billion. This compares with $10 billion on a quarter-on-quarter basis. The company's sequential revenue growth in Q3 is at 0.8% on a quarter-on-quarter basis, same as the September quarter and ahead of street expectations. K. Krithivasan, the CEO of the company, reads in his statement, the growth momentum we witnessed in Q2 continued in Q3. We remain steadfast in our ambition to become the world's largest AI-led services company, guided by our 5-pillar strategy. AI services now generate $1.8 billion in annualized revenue. Now, this, as of the last quarter, was at $1.5 billion. In December, when the company held an analyst meet, they had quantified the AI revenues for the first time, and they had said that AI revenues, this was as per what they shared in December, was $1.5 billion. Now, that has accelerated to $1.8 billion. So that is the key headline. So some numbers important: constant currency revenue growth of 0.8% sequentially, ahead of the CNBC TV 18 poll of 0.5%. EBIT margins 25.2%, unchanged sequentially, but the company has absorbed the wage hike. Wage hike for TCS this time was pushed forward to December. So in the current quarter, the company has taken a 2-month impact of the wage hike. They've absorbed it and managed to maintain margins on expected lines. The AI-led revenue on an annualized basis, not on a quarter-on-quarter basis, but on an annualized basis, stands at $1.8 billion, and that is up 17.3% in constant currency terms. So it's growing much faster than the company average, which is 0.8%. That also brings you to the question that maybe the core services revenue, X of AI, perhaps is degrowing, because this AI revenue is growing at 17.3%, but the balance is just up 0.3%. And the company says that the momentum they saw in Q2 has extended into Q3. The other one important number that we want to just check is the headcount, because last time, on the back of the natural attrition and the restructuring of employees, their headcount had declined by nearly 20,000 on a quarter-on-quarter basis. We have with us Anshul also joining in. Anshul, you want to comment on Q3? What was your big takeaway? And when we speak to the management, what should be top of mind?
Yeah, so the results have been, in line with the expectations. I think the street has already factored in that Q3, as it is, it's a seasonally soft quarter for IT industry as a whole, all on account of furloughs, leaves, lower utilizations. So the revenue, I think, sequentially 0.8%, it is a bit flat. And so we can say that from a big uptick in this quarter, I think, can be annualized AI services revenue has been, at almost $1.8 billion right now. That's a uptick of almost 17.3% sequentially, largely pivoting the Indian IT space from a pure labor perspective to pivoting towards more AI generating products and strategies. So that is a big uptick. Rest, I think, total contract value, I think it's about 9